Hi, my name is John Stephenson, and today I'd like to talk to you about Shell Shock, my new book, How Canadians Can Invest After the Collapse. Look, for as long as I can remember, we've always heard that if America catches a cold, we here in Canada, we catch the flu. We were just too small, too unproductive. We were hewers of lumber and drawers of water, or so we were told. But this economic collapse has made something very apparent. America's star is waning. And at the same time, China, a nation that for 18 of the last 20 centuries has been the largest economy in the world, its economic juggernaut continues. It continued through this whole crisis unabated. It never had economic growth less than 6%. And this is fantastic news for us here in Canada and for investors around the world who are looking for a solid place to invest in. Canada and the Toronto stock market is a barbell market, heavy on financials and heavy on materials and energy. And those two sectors are going to send the fortunes for Canadian investors or investors into Canada even higher in the months and years to come. Why? Well, because of this rapid and massive industrialization and urbanization that's going on, not only in China, but throughout the whole developing world. 621 million people so far have come out of extreme poverty in China alone in the last 30 years. They're starting to spend. They're starting to become consumers globally. And they need refrigerators, automobiles, and housing. And Canada supplies all of that. So do countries like Australia, South Africa as well, because we're commodity-oriented countries. And this will lift the fortunes in the years to come for investors in all of these areas. In banking, the Canadian banks were the most solid in the world. Leverage ratios were 10.5 to 11 to 1, where when Bear Stearns filed for bankruptcy, it was 30 to 1. And Royal Bank of Scotland, which is now owned by the government of the United Kingdom, was 60 to 1. There is a new economic order unfolding, one where Asia will retain and regain its historical ascendancy led by China, and countries that are part of the value chain are going to do extremely well. You want to be in commodities. You want to be in commodity producing countries. The Toronto Stock Exchange has outperformed the S&P 500 stock exchange over the last 10 years by more than 10.3% each and every year in US dollar terms. Not only that, it's outperformed the Morgan Stanley Capital Index, World Index, and Emerging Market Index, both of these indices, and at lower risk. Playing Canadian resource equities is a way to have better returns at lower risk without having to figure out Chinese accounting. Canada's rising, commodities are rising, and Asia is rising. Thank you very much.